Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. There seems to be a theme with the US data being printed. At least the headline numbers indicate quite a robust US economy with a very healthy labor market. On the oil front, Saudis and Russians have extended cuts, which has led to a rise in oil prices. And even US has recently indicated that they won't be filling their strategic petroleum levels as the prices are high. Morning, JK. A lot of updates for you to cover. How are you reading yesterday's moves?
Hey, good morning, Swaraj. Yes, there was quite a bit of data yesterday and a lot of central bankers' statements for the markets to digest. And of course, the reaction has not been that high because we are heading into the crucial non-farm payroll data on Friday. Yes, we had the ADP number, private payrolls, which came at 1,84,000, much higher than expected, and also the last month, which was also revised higher. And importantly, the wage rise was significantly higher at 5.1% as per the ADP report. We don't see too much correlation between ADP report and the BLS report, which comes monthly, but it is an indication that at least once in one segment, the job market is quite strong. But there was a contradictory indication in ISM services report where the employment component continued to be in contraction for the third month in a row. So that was one thing that the market was looking at, and also the fact that the prices paid in services segment of the economy dropped quite a bit, although still in expansion, but dropped by almost 5 points. So all these things led to some sort of profit taking in the bonds, which had the yields rise phenomenally in the last few days, almost 22 basis points on the 10-year. And there was some profit taking seen yesterday. Even profit taking was seen when the Eurozone inflation was published, where the core as well as the headline inflation in Eurozone came lower than last month and lower than expectation. Actually, which is giving more credence to the expectation of a rate cut from the ECB in June. Now, that's where the central banker statements come. The ECB's member, Mr. Holzman, said, in principle, he agrees for a June rate cut, but he also wants to see more supportive data, and also he would want to keep an eye on the Fed. So indirectly saying that ECB won't cut until the Fed cuts. So that's what most central banks are, taking the line. And then we had, some statements from Powell also, where he said the recent readings on job gains and inflation higher than expected, but it does not materially change the overall picture. He's trying to play down the recent strong data and also the labor market rebalancing seen in data on quits, job openings, employer and worker surveys, and continued gradual decline in wage growth. So he has a dovish tilt to his statement, while he is not saying that we will cut in June or anything openly, but he's keeping those options quite open to expectation. Now, generally, if you look at the market seems to be now more hawkish than the Fed marginally, because the expectation of rate cuts extent in 2024 is now at 65 basis points versus 3 rate cuts of 0.25% that the Fed is projecting in their dot plot. So that's an anomaly that we are seeing for the first time. But yes, there was profit taking yesterday in the bonds, and then of course the stocks were also initial rally was sold into again due to profit taking sentiment in the market. Now, what it did to the dollar? Surprisingly, dollar had a sharp retracement to its gains of the previous day. Particularly the euro, which was threatening to break 1.07 once again, had a strong rally of more than 1%, hitting 1.0850. Eurozone PMI final number came, of course, higher than the preliminary estimate. There seems to be some, underlying support for the euro, which keeps its downside very limited. Although so far, whatever we have seen in the last few months is a range trading in the euro between 106.5 and 1.10. That's the range that we are seeing for the dollar index between 103 105. This range is not looking like it's breaking immediately without any large trigger. So that is something that is very apparent. But in one zone where dollar continues to weaken is gold. or the precious metals. Gold made a new high, 2,300 mark, another landmark. And if you look at the chart, it doesn't look like we have an immediate reversal of this trend. Very short-term charts do look overbought, but I think the trend is quite strong enough for further gains. And what caught up yesterday was silver, which made a very strong gain after breaking 26 levels that was stopping for quite some time. And silver also in the last 2 months has made as much as 21% gain, well above 17% gain that the gold has made. So overall, if you look at it, it's the commodity space that is garnering a lot of attention. Oil also rose to almost $90 in the Brent. Of course, factors there are increased demand due to economies looking like stabilizing in Europe and China, and then the output cuts in the OPEC countries, finally having some impact. Lower inventory levels in US last week, as well as reported attacks by the Ukrainian forces on the oil refineries in Russia. All these things are actually having some upward impact on the oil prices. So all in all, dollar seems to be rangy, but I think uh, looking at the way we have seen the rally in gold and silver and commodities, it does smack of underlying dollar weakness, and whether it will reflect in the currencies is something that we need to wait and see. One currency which I will continue to watch is USD, and which once again had a failed attempt at breaking 152 yesterday. Now back in the middle of the range between 151 and 152. What will trigger a reaction in the end to the downside is most likely to be the intervention or a strong downward shift to the Fed yields or the Fed rate cuts. So that's what we are looking forward to. And in the domestic market, of course, all action, or rather I would say more action was in the exchange market than in the OTC market. OTC, of course, saw the rupee trade to near all-time low, closed almost at the all-time low of 83.45. Underlying demand from oil companies, of course, supply of dollars was coming from, once again, the PSU banks not wanting a rupee to weaken as far as RBI is concerned. But in the exchange, of course, a forced unwinding of trading positions not backed by underlying exposure led to huge volatility, particularly in the option segment. There were obscene levels seen in some of the maturities and strikes. Second month strike, and just to quote an instance, 83.50 call for May was traded as high as 4 rupees, and that was steady around 30 paisa just a few days back, and of course closed at around 60 paisa. So that's the kind of volatility when you have a forced unwinding with no liquidity. Still looking at that market today, because today is the last day for unwinding of the positions as per the broker's instructions, although there's no clear-cut instruction in the RBI circular as to whether the positions could be run till maturity or it has to be unwound before the circular become effective. So local market is interesting for different reasons. And then of course we have RBI policy tomorrow, followed by BLS report on non-farm payrolls in the US. Very interesting week this weekend. Thank you.
Thank you, Jake. And quickly summarizing, job numbers from the US were revised higher for the previous months, but if you look at the ISM employment report, that indicated a contraction. So mixed interpretation for the markets. Even the Eurozone inflation was lower than last month and lower than the expectations. So the narrative of a rate cut by the ECB in June is something that is building up quite significantly. But if we look at the member speeches recently by the ECB member speeches, they have been saying that they are also keeping an eye on the Fed. So of course, it seems like no one wants to act before the Fed does. Even in the commodity space, we have seen commodity space has been quite active. Oil prices are higher, and what a rally in precious metals like gold and silver. And for the rupee market, of course, there has been more action on the exchange as speculators close out their positions. And of course, today being one of the last days to act on the same. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.